Hey everyone, since April 21, FIs have sold investment worth more than $50 billion from the Indian stock market. That's roughly around 4 lakh crore rupees. The reason for this huge selling was mainly due to pressure to book profit from developing markets, and India gave a great opportunity to book profit after a sharp jump post-COVID. However, it has got nothing to do with weak fundamentals. Indian economy is fundamentally strong. There is no doubt about that. And those who can bear this pain of stock correction in the short term will eventually get rewards in the long term. Although it is very difficult for retail investors to keep patience and stay invested during tough time. However, mutual fund houses in India have been utilizing this fall in the market as an opportunity to accumulate quality stock for long-term wealth creation. During the same period between April 21 till August 22, DIIs have purchased equity worth 3.5 lakh crore rupees. Now, if you have been watching my videos, then I recently created a video on top blue chip stocks DIIs are buying consistently during this falling market. And there were multiple requests to cover mid-cap stocks that DIIs are buying and utilizing this opportunity for long-term wealth creation. So here I am with 10 mid-cap stocks DIIs are accumulating consistently. But before we proceed, this video is only for long-term investors and only for educational purpose. Make sure that you do your own research before investing your money. Alright. Let's get started. Number 10 stock is from mutual fund sector. It's Nippon Life India AMC. Mutual fund stake in Nippon Life AMC has been increasing since September 20. It was 6.33%, then increased to 6.6, 6.7, 7.46, then 8.81, and then slight dip of 8.37, but again jump of 8.83, and latest holding is 9.24%. Now, what could be the reason for this consistent increase in the shareholding? So one of the biggest reasons is that mutual fund industry in India is still in a nascent stage. The total AUM of mutual fund in India is just $0.4 trillion, whereas developed countries like US have this AUM of $25 trillion. It means US mutual fund industry is nearly 62 times bigger than India. And if in the next 20 years, Indian mutual fund industry reach half of where US is today, it would be 30 times growth. Nippon Life India is one of the leading AMC in India, including both mutual funds and ETF, and would certainly benefit from this explosive growth in mutual fund industry in India. Nippon Life India is also involved in portfolio management services, alternate investment funds, pension funds that are all in nascent stages in India. Financially also, company is highly profitable with zero debt. Its stock is down nearly 40% from its peak, and currently it commands a market cap of 16,000 crore and trading at a P ratio of 25, which is looking very reasonable. Number 9 stock is from auto ancillary sector. It's Endurance Technology. Mutual fund houses are consistently increasing their stake in Endurance Technology since last 12 quarters. In September 19, their stake was 6.65%, that got increased to 6.86, 7.36, 11.64, 11.9, 12.8, 13.5, 15.17, 15.3, 15.6, 15.8, and now 16.69. Promoter holding in the company has been consistent at 75%. The major selling is from FII. Public shareholding in the company is negligible. Now, auto sector all over the world has been struggling for a long time. Especially COVID badly impacted this global supply chain and overall demand in auto sector. Post-COVID, when there was recovery in demand, the supply could not cope up due to reasons like lack of semiconductor supply, high gas prices, and high metal prices. But all these problems are temporary. Once these problems will resolve, and in fact the auto sector is already in recovery mode, fundamentally strong companies like Endurance are bound to bounce back. The slowdown in auto sector resulted in fall in earnings as well as the share price, and DIIs have grabbed the opportunity in a systematic manner. Endurance Technology is one of the leading auto component manufacturer and would also benefit from electric vehicle revolution in the world. 8th stock is from cement sector. It's the Ramco Cement. DIIs holding in Ramco Cement has increased from 21.58% to current levels of 33.4%. In fact, in last few quarters, there is a consistent increase in the shareholding. Ramco Cement is one of the leading cement manufacturer in India with strong presence in South India. And as far as cement is concerned, it is one of the most important building material, and there is huge capex all over the country for infrastructure building, real estate building, including both residential and commercial project, then capex to build manufacturing plant, and all of this would require cement. Hence, it seems mutual fund houses are betting on the Ramco Cement in mid-cap segment. Currently, company commands a market cap of around 17,000 crore and trading at a P ratio of 20, which is looking very reasonable. Now, before we proceed, we have a partner for this video. It's M-Stock from Mirae Asset. M-Stock is a trading platform that is disrupting the traditional trading sector with its zero brokerage model. All you need to do is pay a one-time fee of $999 and you can make unlimited trade without any brokerage. It includes your free intraday trading, free delivery, free F&O trades, basically everything free for just one-time fee of $999. And if you open a Demat account with M-Stock, you just need to pay a one-time fee of $999. And your Demat maintenance would also be free for life. So basically you pay a total of $1998 and all your trading is free for life and your Demat maintenance is free for life. This is a great option for those who trade frequently and even for investors who are looking for an alternate low-cost trading account. And the best part is that since M-Stock is a part of global Mirae Asset Group, it brings 25 years of legacy and experience of 15 countries. M-Stock platform is built on really advanced technology that can handle 1.2 crore trades per day and provides you with a seamless experience. By the way, M-Stock has also launched margin trading facility at an interest rate of 7.99 to 9.49%, which is one of the lowest rate in the industry. If you want to explore M-Stock, I have provided the link in the description. Now, number 7 stock is from Telecom Sector. It's Tata Communication. In December 20, DII holding in Tata Communication was 1.4%. It got increased to 7.53%. Reason being promoter selling their stake. However, since then, promoter holding has been constant and DIIs are consistently adding the stock. 7.36%, 7.63, 8.85, 11.49 and latest holding at 12.93%. With Tata Communication, DIIs are betting on the telecommunication sector in India, which is going to explode with 5G revolution. Tata Communication carries around 30% of world's internet routes and connects businesses to 80% of world's cloud giants and 4 out of 5 mobile subscribers. If you look at the future, it is all about connected devices, also known as Internet of Things. Today, majority of new age companies are building their businesses around internet. Just imagine the kind of data that would generate around the world. And of course, you can blindly trust the leadership of Tata Group. Number 6 stock is from consumer durable sector. It's TTK Prestige. TTK Prestige is again one stock where mutual fund houses are consistently increasing their shareholding in last 12 quarters. 9%, 10%, 11%, 12%, 13%. Consistently there's an increase in DII shareholding. TTK Prestige is a leading company in kitchen equipment segment and its brand Prestige that offers cookers, cookware, gas stoves, induction cooktop, kitchen appliances, etc. Recently, TTK Prestige has made a strategic investment in Ultra Fresh Modular Solution that engaged in the business of modular kitchen and kitchen appliances. Financially also, TTK Prestige is highly profitable with negligible debt and good amount of cash to invest for future. At current levels, company is commanding a market cap of 13,000 crore and trading at a P ratio of 40. Number 5 stock is from capital goods sector. It's Astral Limited. DIIs holding in Astral has consistently increased from 7.68% in March 21 to 8.03, 10.72, 11.6, 12.7 and latest holding at 13.6%. Astral is one of India's largest manufacturer of CPVC and UPVC pipes that find usage in plumbing, sewerage, agriculture, industrial piping and home piping system. Astral has also diversified into adhesive segment with products like epoxy adhesive and putty, silicone sealants, construction chemicals, tapes, etc. As far as future is concerned, Indian government has a lot of focus on providing clean drinking water to rural villages, provide water for agriculture, provide proper sanitation facility and has launched various initiatives like Housing for All, Nal Se Jal, Project Amrut, Swachh Bharat Mission, National Rural Drinking Water Program, etc. Moreover, the demand for real estate is now picking and every building requires a piping system and adhesive while construction. So there is going to be a good demand for Astral products. Number 4 stock is again from consumer durable sector. It's Kajaria Ceramics. DIIs are consistently increasing their stake in Kajaria Ceramics in last 5 quarters. Their stake has increased from 14.46, 14.89, 15.24, 17.26, 20.3, 22.4. Kajaria Ceramics is the largest manufacturer of ceramic and vitrified tiles in India with 10 to 11% market share and the 8th largest company in the world. In addition to tiles manufacturing, Kajaria Ceramics has also diversified into bathware segment including sanitary ware, faucets as well as plywood segment. Again, the key growth driver for Kajaria Ceramics include government spending on infrastructure building, high capex in manufacturing sector and growing demand in both commercial and real estate properties. This would certainly create a huge demand for houses and flooring and walls are one of the most essential part of the house. Hence, people would prefer best tile for their house. Moreover, Kajaria Ceramics diversification into sanitary ware and plywood would also boost its growth in the future. Also, India is still one of the lowest per capita consumer of tiles. So as the earnings are increasing, people are spending more money on premium tiles and this premiumization trend would continue to increase and would certainly benefit top brands like Kajaria Ceramics. I have recently covered the fundamental analysis of this company. Number 3 stock is again from capital goods sector. It's Bharat Forge. Mutual fund holding in Bharat Forge has again consistently increased from 12.13, 15.67, 20.02, 23.55 and latest holding at 24.33%. Bharat Forge is the largest forging company in the world and caters to automobile and industrial segment where it manufactures various parts including engine components, chassis components, etc. Company is tier 1 supplier to top car manufacturer like Mercedes, Audi, Bentley, Porsche, etc. As far as future is concerned, one of the biggest growth driver for Bharat Forge is electric vehicle initiative. Company has launched various components for electric vehicle as well as launched an electric bike Kratos. Then Bharat Forge is also expanding its business in defense and aerospace. Especially the government focus on domestic manufacturing for defense equipment is a big benefit for Bharat Forge. Company has been making acquisition and has recently started a new manufacturing facility in US. All these major developments will propel the growth of Bharat Forge. Currently, company commands a market cap of around 32,000 crore rupees and it is bound to become a large cap in the future. I have recently discussed the fundamentals of Bharat Forge. Now, number 2 stock is from pharma sector. It's Ipca Lab. DIIs are consistently increasing stake in Ipca Lab since last 6 quarters. Their stake has increased from 24.22% to 24.82, 25.12, 25.24, 30.02, 32.7, 33.49. Now, pharma sector has seen a sharp jump during COVID due to high demand for medicine and that resulted in multifold growth in pharma stocks. But when the economy opened up, the demand for medicines declined and that impacted the revenue and profits of pharma companies. Moreover, the majority of them became very expensive and hence we saw profit booking in this sector. Today, majority of pharma stocks are down and retail investors generally avoid sectors that are falling. However, mutual fund houses know that the demand for healthcare is only going to increase and it is a matter of time. Ultimately, the pharma stock will jump and hence DIIs are utilizing this opportunity to accumulate top pharma companies at very attractive valuation. Ipca Lab is one of the world's largest manufacturer and supplier of over a dozen APIs. Its share price is still down 30% from its peak and currently command a market cap of 23,000 crore with a P ratio of around 32. Now, final stock is from housing finance sector. It's LIC Housing Finance. DII's stake in company has consistently increased from 10% to 15%, 16%. Although there was a slight dip for a few quarters, but DIIs again added LIC Housing in last 2 quarters and latest holdings stood at 19.2%. The reason for DIIs adding LIC Housing Finance is because the housing demand in India has started picking up after a long slowdown. And the increasing interest rate scenario from Indian government is going to benefit housing finance company like LIC Housing because when RBI increases the interest rate, finance companies immediately increases the interest rate on loans. LIC Housing share price is still down 50% from its 5-year highs and currently trading at a price to book value of 0.87 with a market cap of 21,000 crore rupees. That looks attractive considering the future growth prospect. So in this video, we discussed 10 mid-cap stocks that mutual fund houses in India are buying in this falling market on a consistent basis. If I quickly summarize, the list include Nippon Life India AMC, Endurance Technology, Ramco Cement, Tata Communication, TTK Prestige, Astral Limited, Kajaria Ceramics, Ipca Lab, Bharat Forge and LIC Housing Finance. Friends, the idea of this video is to help you identify good quality stocks that mutual fund houses are considering adding in their portfolio. That would give you a good idea to invest in this difficult time. Although please note that there is no guarantee that if mutual funds have added that stock in the past, they would continue to do that in the future. Since currently the global economic situation is not in a good shape, it is also impacting the Indian stock market. But trust me, if you keep patience and invest in quality stocks with conviction, then this fall is creating a great opportunity to invest in some great businesses at very attractive valuation. And that is surely going to reward the long-term investor. So are you utilizing this fall to accumulate quality stocks or waiting for the market to fall further? And if you find this analysis useful, then do like the video and subscribe to the channel. And if you don't want to miss any update, then don't forget to press the bell icon. And if you want me to do similar research for small cap sector, then let me know in the comments. Thank you.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.